As home equity levels swell to near record levels, some advisors tout a different approach to help retirees meet their future cash needs. According to a recent column in Barrons, that may be a reverse mortgage line of credit. Unlike a home equity line of credit, a reverse mortgage line of credit has no fixed term, and any credit left that's untapped grows over time, allowing a borrower to draw down much more cash later. When you borrow against your reverse mortgage credit line, your loan balance grows based on interest rates, but you face no required monthly payments, unlike a HELOC, says the column. The loan is eventually repaid when the home is sold, usually upon the death of the borrower. These lines of credit can help manage certain retirement risks, says John Salter, a wealth manager at Avensky & Katz Folds Wealth Management, located in Lubbock, Texas. One client ran into cash needs after a market downturn and was able to use the line of credit to avoid tapping their portfolio when it was down in value, he said. But a reverse mortgage line of credit is suitable only for certain homeowners after careful consideration, and it's critical to understand the cost and the caveats of this loan product. Salter says he will only consider a reverse mortgage line of credit for folks who can check two boxes. Their house is paid off, and they plan on staying in their home for the foreseeable future. Today, a 62-year-old with a home valued at the current HECM lending limit or more may qualify for a federally insured reverse mortgage line of credit or lump sum of about $360,000, he says. However, some advisors like using these as lines of credit for people who don't need the money now, but worry they may need it in the future. This is a way to manage gaps in a retirement plan, said Steve Resch. When the line of credit is left to grow and compound and keep up with inflation, I view it as a hedge against declining real estate values and higher interest rates. Barrons notes a very interesting example of the use of a HECM line of credit. Steve Resch said he recently had a 62-year-old client who was considering buying a $300,000 long-term care insurance policy to help cover potential home health care needs and the cost associated with them, with an annual premium of $9,000. After 20 years, she would have paid $180,000 in premiums for $300,000 of coverage. Because it was determined she would be staying in her home, Resch recommended a reverse mortgage line of credit. And based on her $750,000 appraised home value, her age and interest rates, she qualified for $268,000 in a line of credit. The cost of setting up the line of credit with the HECM came to about $25,000, which she does carry as a loan balance instead of paying it off up front. With the HECM, she has no monthly or annual required loan payments, and her original credit amount is compounded based on a variable interest rate. Assuming a conservative 4% annual rate, after 20 years, she will have nearly $600,000 in available credit minus the accrued loan cost of about $56,000 for an available $544,000 to tap for home health care needs. Roughly 61% of baby boomers that were surveyed by Clever Real Estate currently own their home, and among that group, more than half, or 54%, never plan to sell, spending the rest of their lives in the home. Roughly 61% of baby boomers surveyed by Clever Real Estate currently own their home, and among that group, more than half, 54%, never plan to sell, spending the rest of their life in their home. Just 15% expect to sell in the next 5 years, and that suggests they'll provide little help in easing the current constraint of housing inventory, which is still below pre-pandemic levels. Their reasons for staying put are clear. More than 3/4 of boomer homeowners, 76%, primarily credit their home ownership for their financial security, while 86% says it leads to a more stable home life. To find out more about the boomer generation's experiences in buying a home, their current views on home ownership, and their perspectives on the future of home ownership in America, Clever Real Estate polled 1,100 Americans born between 1946 and 64, including 20% who have never owned a house. More than half of the boomers who currently own their home never plan to sell it and hope to live in it for the remainder of their years. And those waiting for the so-called silver tsunami to appear and upend the housing market with millions of new boomer homes in inventory may be waiting longer than they expected. 90% of boomer homeowners have concerns about home ownership as they age, with maintenance and upkeep issues and the increasing costs being the most common complaints. Nearly two-thirds of boomers who do own a home, 65%, expect a profit of more than $100,000 when they sell, and 40% expect to clear more than $200,000. More than three-quarters of baby boomer homeowners, 76%, say that owning a home is the primary reason that they're financially secure. Half of baby boomers who have owned a home, 50%, bought their first house for $75,000 or less, while almost two-thirds paid less than $100,000. When factoring in inflation, just half of boomers believe that they would still be able to afford a home today. And in our last story, major players in the mortgage market have made big bets on the future boom in reverse mortgages. A recent column in National Mortgage News examines those changes over the years and how reverse mortgages are marketed. Following the developments in regulation, companies are now more limited in how they can advertise to Americans. One of the main methods in the past decades was to gain trust through a famous television spokesperson. Now, those methods are beginning to see a shift, said Wayne Stanley, president and CEO of the marketing firm Bo Digital, which specializes in the land title insurance industry. Because of greater scrutiny from regulators, such as the Consumer Financial Protection Bureau or the CFPB, marketing reverse mortgages on TV has become less common. A study done by the Bureau in 2015 analyzed reactions to reverse mortgage advertisements and concluded that the ads of the time tended to confuse consumers, causing concern. The CFPB is concerned that advertisements may lead some older homeowners to believe that reverse mortgages are a risk-free government program or benefit. While the federal insurance for reverse mortgages provides some important protections for borrowers, they are secured loans and homeowners can lose their home if they fail to meet the terms of the loan. It should be noted that the risks cited by the CFPB about reverse mortgages can also be found in a traditional mortgage loan if they fail to meet the terms of the loan. Today, many companies have now shifted to a direct education model in their marketing, explaining both the benefits and the risk of a reverse mortgage in direct mail and email for the more technology-savvy homeowner, said Stanley. He also added it's likely a mix between those conditions of the current market and the direct approach, which will help to motivate homeowners to pursue the loan. Because of the current state of the economy, it will be much easier for some consumers to understand the benefits of a reverse mortgage, said Stanley. Now here's a look at some of the famous faces from television that have promoted reverse mortgages in the past, noted by National Mortgage News. Tom Selleck, in 2012, he appeared in home ownership campaigns for Coldwell Banker. In 2016, he became a longtime spokesperson for the reverse mortgage lender American Advisors Group after a search to replace the late Senator Fred Thompson. Senator Fred Thompson was AAG spokesperson before Selleck from 2010 until his death in 2015. He appeared as an actor in several episodes of Law & Order and also in several blockbuster Hollywood movies, including The Hunt for the Red October. Senator Thompson also ran for president in 2008 as a Republican candidate. Then there's Henry Winkler. He first appeared in the commercials for one reverse mortgage in 2012. The Fonz made his final appearance in the ads in 2018. Robert Wagner of Heart to Heart fame was a spokesperson for Senior Lending Network and later for Urban Financial Group. Jerry Orbach, known for his role in the television series Law & Order, represented the Senior Lending Network until his death in 2004. And that concludes this episode of HECMWorld Weekly. Thank you so much for joining us. We do have an audio edition, which you can find on Apple Music, Spotify, and Podbean. Thank you for joining us, and be sure to return next week for the nation's only weekly podcast, bringing you the latest reverse mortgage-related news for you, the mortgage professional.